So the tax bracket strategy can literally save you 6 figures or more in taxes over the course of your life. I don't know why more people don't use it, but I'm going to give you the basics and show you how it works. My name is Denver Noahs, president of Wealth for Life. I'm a 20-year advisor and fiduciary. So tax brackets, the important thing to know is when you hear people say, hey, I'm in a 32% bracket or a 35 or a 37, that doesn't mean all of the money is taxed at that rate. The tax brackets are tiered, and each range of money, each bracket of money is taxed at a different rate, depending on if it's 10%, 12%, 22, 24, 32, 35, 37. So now the brackets are going to be different if you're single or married, and this is a kind of a rough estimate of the chart. The numbers do change every year, and I've rounded it a little bit to make it even, but here's kind of the basics. So when you look at these charts online, the numbers look a little bit different. It might be 20,250 or 550 or 83,450. So those numbers will change, but this is to get you the idea. The first block of money, meaning that $0 to $20,000 if you're married, is taxed at 10%. Then 20,000 to 83 is taxed at 12%. 83,000 to 178, 22%, and so on. So 178 to 340, 24%. Each block of money is taxed at different rates. So what you want to do then is you want to be using your taxable money here in these lower brackets to fill up these lower brackets. So this is your taxable money. And then you want to move to tax-free money for these higher brackets. So the idea is okay, you use your 401ks, your IRAs, your SEP plans, defined benefit plans. Those are going to be tax deferred, meaning you get the tax deduction now, the money grows. When it comes out at retirement, it's taxed as ordinary income. So then you have this taxable income. It comes out and it's going to fill out these brackets depending on how much is coming out. So in the example, let's say you filled up the $178,000. You have $178,000 coming out of your 401ks or your retirement plans, your business, everything else. Now, any money that you take above that is going to be taxed at 24% up to the next level. So if you can go in this example, you bring in $50,000 tax-free, right? And you're at the 24% bracket. Well, what does that save you? That saves you $12,000 a year in taxes every year during distribution. So if you go out, and you're in distribution for 30 years, right? That just saved you $360,000 in taxes. And the more income you're making, the more the tax savings is going to be. Let's say you've maxed out all your deductions, and now you're here in this 32% bracket. So you've exceeded 340K, and now you're in the 32%. Well, right? So now let's say you can bring in $100,000 and have that be tax-free times 32%, right? How much is that going to save you every year? It's going to save, $32,000 a year. In tax savings. And that's just critical because it adds up to so much money. That's nearly $1 million, right? Just times it by 30, not including the interest that you can earn on that. So it's important when you think about how money is allocated. Money is allocated in 3 different ways, or money is taxed in 3 different ways, I should say. Taxable, tax deferred, and tax-free. I like to call those tax buckets. So taxable money, of course, is your business, your income, distributions from IRAs and 401ks. Tax deferred is money you get a tax deduction now, 401ks, IRAs, and SEPs. That's before retirement. Money grows, then it's taxed as ordinary income. Tax-free strategies would be things like Roth and the tax-free matching program that we talk about. The tax-free matching program really is probably the best way to create large amounts of tax-free income because it has a 3-to-1 match on contributions. So that means you put in $250, the bank adds $750. Now you have $1 million asset that's growing tax-free. That can really move the needle as far as getting into the income into those tax-free positions and creating that lifetime tax savings that can just really add up to millions of dollars. So that's a quick overview on tax brackets. It can save you 6 figures or more in taxes. Check out the tax bucket worksheet we have. That can help you start to allocate assets in a taxable, tax deferred, and tax-free way. So you have some good tax diversification there. It'll save you a lot down the road. My name is Denver Noahs with Wealth for Life. Thanks for watching.